Investors are always looking for high dividend yield stocks that can, in theory, provide them with a high return on their investment. However, as you learned in a previous lesson of the dividend investing course, stocks with the highest dividend yields tend to underperform those with lower yields because higher yields often reflect higher underlying risk. When a company's dividend yield is abnormally high, the market may be expecting management to announce a dividend cut. In this lesson, you will learn how to use the dividend payout ratio to spot a risky dividend before it's too late and determine if a company's distributions to shareholders are sustainable in the long term. The dividend payout ratio is a popular financial metric that is equal to the total dividends paid to shareholders divided by the net income. If you are an income investor and you want to pick only the best dividend stocks, the dividend payout ratio can make the difference between great and bad investment decisions. For example, if two stocks have the same dividend yield and are nearly equal in other respects, you want to pick the one with the lower dividend payout ratio because the company retains a larger percentage of earnings to reinvest and grow while paying you the same amount in the form of dividends. As previously mentioned, the dividend payout ratio is equal to the total dividends paid to shareholders divided by the net income. You can also calculate it by dividing the dividend per share by the earnings per share. The dividend per share is equal to the total dividends paid by the company divided by the number of ordinary shares outstanding. The earnings per share is a financial metric equal to the net profit divided by the number of ordinary shares outstanding. We can use the formula mentioned earlier to calculate Microsoft's dividend payout ratio. Using the Finbox Data Explorer, we can find values of the metrics required for the calculation: Microsoft's total dividends and Microsoft's net income. We can now make the calculation by dividing the total dividends by the net income. Microsoft dividend payout ratio is 32%. That means that Microsoft 32% of its earnings to shareholders while retaining the rest to invest and grow the business. You don't need to do the calculation alone, and you don't have to use a dividend payout ratio calculator. You can use the Finbox Data Explorer to access dividend payout ratio data for 100,000 plus companies worldwide. The average dividend payout ratio varies greatly among different sectors, so it is very useful to compare a company to its sector while evaluating it. As of July 4, 2020, the sectors with the highest dividend payout ratio are real estate, utilities, and consumer staples. Communication services, industrials, and healthcare are the sectors with the lowest dividend payout ratio. You can have up-to-date stats and graphs like that directly in Excel or in Google Spreadsheets with the Finbox Excel add-in. To download it for free, finbox.com/integrations/Excel. After you download the Excel add-in, you can download the sector benchmark model using the link in the description below. If you try searching for an appropriate dividend payout ratio on Google, you will find a wide range of answers. For example, some resources state that a good dividend payout ratio is below 30%. Others say that a healthy payout ratio is between 30 and 50%, and so on. As a rule of thumb, a good dividend payout ratio is one that is in line with the sector average. When a company pays a dividend that is high relative to its earnings and/or compared to others in the same sector, there is a strong chance that the distribution is not sustainable in the long term. Investing in businesses with a too high dividend payout ratio could cost you a lot of money. You can check if the dividend payout ratio of your companies is sustainable by comparing it to the sector average using the Finbox Data Explorer. Before you leave, don't forget to subscribe to the channel, because in the following days we'll publish new videos that will help you learn everything about dividends for free. See you at the next lesson.